Okay, so welcome to Fractal Change of Character or Market Structure Shifts. We have normal bullish and bearish ones, and we also have ones that focus on multiple time frames. I'm going to explain to you in a minute what I mean, but if you had a break of structure on the hour, you would have several breaks of structure to bullish and bearish that would be manufactured to be able to make that higher time frame market structure shift or breaking structure. So we're going to look at what that means. Okay, so I made this really big so you can see what I meant. Now on the 1 hour, this started to make a market shift. But if you notice on the 15 minutes, it had one bullish and two bullish, and then a break of structure on the 15, two breaks and a break of structure on the hour, and a market structure shift. So inside this one change was 1, 2, 3, 4, 5 different changes. So you can see that what I meant by fractal nature of the market is that it all comes together on a higher time frame from all these movements to get us to these positions, to get us to this point in the chart at that point in time. So when you're thinking in your head that you see this on a higher time frame, you're looking for how that would happen if that was to happen here. How would that happen if, say, you were here in the market? Your job as a trader would be to see what would need to happen for you to get to this position. So when you see the sweep happening, you know once this sweep has happened and it's come back up, that was not going to be continued if this broke above this. Because then that would signal to you that the market's changed on a smaller time scale and on the hour that you would be expecting for the market to shift bullish once this breaks through this weak high here. Okay, so fractal nature of financial markets. What are fractals in finance? Fractals in finance are breaks within the market price movements that are repetitive or self-similar across various different time scales. This means that breaks represent the complex and often chaotic nature of financial markets. As I've just shown you in the previous slide, the difference of how many times it broke on the 15-minute charts to make that one change for the market structure. I know it created a break of structure on the hour when I showed you that, but that was only to manufacture the move, probably to take out people in the market that had stops there so that they then could reverse the market and send it the way that they actually intended it to go on a higher time frame. So, fractal nature of markets behavior. Markets display fractal behavior in a way that trends and breaks emerge. Whether you're looking for a 5-minute chart or a monthly chart, certain patterns tend to obviously repeat themselves. This repetition is the essence of fractal analysis and trading. So, real life example would be a bullish engulfing pattern may appear on both the short-term chart, indicating a potential short-term reversal, and in the larger time scale, indicating a more significant trend change. So applying fractal analysis to your charts would be in a way to spot potential trend reversals on smaller time scales by identifying these patterns at different scales. Traders can then make more informed predictions about future market movements and adjusting their strategies accordingly. Right, so limitations and considerations for this, guys. Fractal analysis can be complex and subjective, and it actually requires experience to be able to interpret this effectively, which means from day one of watching this, don't think you are a professional. You're going to have to look at the examples that I put in the course for you. You're going to have to then go away and try and figure it out yourself. Use the indicators to show you where the fractal areas come into play. I've got multiple market shifts in the indicators that you can have, say 5 minutes, 15 minutes, and you can be on the hour. But that's the thing, the candles are bigger on the hour and you're not going to be able to see the full movement. So what I tell people roughly to start with is start on the 15 minutes and use the 5 minutes so you can see the fractal nature of the market. Okay, so market conditions. These breaks may be more or less like noticeable, or these breaks will happen more on a regular basis in the lower time frames. which means you're not going to get such high volatility in periods of 5 minute breaks. So as you would in a 15-minute break, because there's less of them on the chart. Okay, so now you understand what fractal change of character and market structure shifts are. So you understand that the approach to it and how you can work it out. So it now gives you an insight into the inside information of what's happening inside the charts in the market. This is powerful if you understand it, fractal natures. And this is how the markets run. It's part of a broader analytical approach to trading, always considering risk management, and you're always looking at individual trading styles. Okay, so this is fractal change of character and market structure shift. And I'll see you on the next video.